Hello there. Let's take a look at your markets news now. Stock markets in Asia took in stride in the latest twist in the U.S. President Donald Trump's tariff rollout today. Tariffs on Japan and South Korea are now due to go up by 25% as of the 1st of August. Japanese Prime Minister Shigeru Ishiba called the hike deeply regrettable and said his nation would continue negotiations with the U.S. Thailand's finance minister, on the other hand, said his country is preparing a backup plan to deal with a 36% tariff imposed on its exports. Asian markets slumped at close as the Nikkei dropped 0.7% to 24,110. The Hang Seng edged also down by 0.1% to 27,091. And the Shanghai Composite remains also closed for the public holiday. U.S. stocks ended lower as renewed trade tensions weighed on investor sentiment, pulling some major indexes back from record highs. U.S. stocks fell on Monday as renewed trade tensions weighed on investor sentiment, pulling some major indexes back. Investors are also turning their attention to the second quarter earnings season, which unofficially kicks off on Thursday with results from Delta Airlines. Analysts are watching closely for signs of how corporate profits are holding up in the face of trade tensions and geopolitical risk. The Dow Jones Industrial Average fell by 0.9%, while the S&P sank 0.7%. The Nasdaq Composite Index shed 0.9% to 20,412. Back home, the JSE is mainly higher at this hour. The all share has fallen 0.2%. It's sitting at 97,605. And as we look at the currencies for this hour, the rand is trading at 17 rands 79 to the US dollar. It's sitting at 20 rands and 87 cents to the pound sterling, and at 20 rands 17 cents to the euro. Let's take a look at the commodities for this hour. Gold is also trading at $3,323, while platinum is sitting at $1,370. The price of Brent crude oil is sitting at $69.11 a barrel. Our market commentator for today is Magwe Masilela from Magwe Masilela Fund Managers. Magwe, always great speaking to you. Welcome to Business on Point. I would want us to start about the tariffs, but there is a much more pressing story on our local front. The Competition Commission just announcing a short while ago that they've reached an agreement with Vodacom and Mazif. We know that that deal had been contested and referred to the tribunal, and the Competition Commission had asked the tribunal to actually not approve it, citing competition concerns. We haven't got much, haven't had the opportunity to see much about what exactly has changed, but perhaps you can tell us your views about the significance of this deal.
Very important, because given the amounts that the guys are prepared to spend on infrastructure, given the fact that people have been complaining about connectivity, especially when it comes to outside or rural areas. And remember that we even have overseas companies wanting to come and offer us something much cheaper here. But anyway, the minister had indicated that he was going to appeal that. And I think the guys made the right decision, because all their concerns that they raised, and as you said, because of competition issues, the guys have managed to address all those. So as a result, there's no need for them not to allow the deal to go ahead. But it's very important, especially when we know that we are moving into a digital world. We are looking into implementing AI. We are looking to be able to compete with our peers, that we get people not just in urban areas, but also in rural areas to have access to reliable, fast and cheap connectivity. And the guys promised to spend billions to make sure that they get that to happen. And all these people are competing mainly on the mileage or the kilometers that we are covering when it comes to fiber.
Yeah, I'll be looking at that share price to see how it's going. But the news of the day since last night has been the issue of those trade tariffs. But what has been talked about mostly by economists and industry players is perhaps the confusion about whether it is 7.6 or 30% that the U.S. should be effecting as a reciprocal trade tariff. Perhaps tell us about where, with the trade balance, the balance of trade, where the confusion goes and what exactly, how the U.S. exactly sees this vis-a-vis how we see it.
You know, we know that the US, they've got a tendency to impose a way of trying to maybe scare you so that you can just fast track. And yes, for me, it's not even about the 7.6 or the 30. We know that the US is a very important market, the second biggest trading partner after China. I mean, just last year we had almost 156 billion rands of trade, I mean, exports sending to the US. But for me, the most important thing is that 2 weeks back, the US themselves said they are working, or they'll give us a template that they would like to have a trade deal with sub-Saharan Africa. And we've been waiting for that. It never happened. And yes, an issue here, we've got almost 77% of the goods coming out of the US to South Africa where you don't even impose any levy. So it's just clear that the measure that they've got in the US is totally wrong. And you can just say that even before the percentages that Donald Trump has been imposing, before even suspending this for 90 days, those were not informed. It was a way of saying, I'm just going to put this high number to make you start running around and make sure that you come and talk to us.
Yeah. And the president is urging South African businesses to, guys, rather diversify, because I think he can see that, you know what, at the rate that we are going, the economy is going to continuously suffer. We already know the impact that this will have on the citrus industry. The diversification route is definitely the way to go, isn't it?
Definitely, and it's also our fault. We made the US to be what they are. They're very big, too big to fail or too big to touch. And it's all because all of us were running to the US. And this whole issue of diversifying is funny. It's not something that we should be talking about it today. It's something that should have been there a long time ago. And we blame it to the business, leaders. This is something that they should have done long time ago. The risk is not just going to be tariffs. Any other thing could have been a risk, just to have an exposure to one particular market.
And we don't talk enough about that. While we will suffer because they are a trading partner, but they too will suffer because we have items that we export to the US as well.
Definitely, but for them, we need them more than they need us. I mean, they themselves, they've got a very big domestic market. I'm not saying they will be able to consume everything that they produce, but compared to us, I mean, look into that number of 156 billion. Look into what it's going to do when it comes to our factories or into our industries. As you said, the citrus market as well. And we are talking in a position where, unfortunately, we've got this very high unemployment, so we cannot afford to shed any job going forward. So I think as much as we need them, it must be a question that it has to be fair to all the parties.
Makwe, always appreciate your insights. Thank you so much. I've been speaking to Makwe Masilela, quite a regular on the markets here on Business on Point. Makwe Masilela is with Makwe Masilela Fund Managers.